And now oil markets are in shock mode as the West Asia conflict drives one of the biggest price surges in decades. Brent crude has surged 23% to $114 a barrel, the biggest single-day jump since at least 1988, after deadly climbing 28% last week. At the same time, US crude has spiked 27% to over $115 a barrel, raising fears that petrol prices around the world could rise sharply. Meanwhile, Israel says that it has expanded its military campaign, striking Iranian commanders in Beirut, widening the conflict beyond Iran's borders. Washington has also hardened its stance. US President Donald Trump has warned that the war could end only when Iran's military leadership is eliminated. The market turmoil comes as Iran names Mojtaba Khamenei to succeed Ayatollah Ali Khamenei as supreme leader, signaling that hardliners remain firmly in control in Tehran amid the ongoing conflict. President Donald Trump has said that the recent spike in oil prices is the quote-unquote very small price to pay if it leads to the destruction of the Iran's nuclear threat. Posting on his social media platform, Truth Social, Trump argued that short-term price increases will fall quickly once the Iranian nuclear threat is eliminated. In the post, Trump wrote that the temporary rise in oil prices is worth it for USA and world safety and peace, adding that quote-unquote only fools would think differently. Meanwhile, the conflict is disrupting global energy routes. Oil tankers are still avoiding the Strait of Hormuz, one of the world's most critical choke points for oil and gas shipments. Economists warn that prices could briefly surge towards $120 a barrel. But if the conflict drags on, analysts say that oil could remain elevated nearly $80 a barrel through mid-year, slowing global growth and pushing inflation higher. And if the crisis widens further, oil prices could climb well above $120 a barrel, raising the risk of global recession. For more on this, I am being joined by News9 executive editor Kartik Malhotra. Kartik, the oil prices have skyrocketed, markets are now bleeding, and with no end of de-escalation in sight, do you think how the situation will now unfold? Will it get worse for Indian investors and buyers?
Well, that's a tough one. Honestly, nobody has got easy answers to that. And the critical question, the underlying question which is going to determine the mood of markets and hence the impact on investors is how long this conflict in West Asia is likely to continue. Now, some estimates had initially at least suggested that this is going to be just a few days. It got increased to just a few weeks. And then now we are seeing that perhaps, until what Donald Trump calls the unconditional surrender of Iran, which could be a few months until when the war prolongs. I think investors are going to be in for choppy times. One could say there could be, some days where markets recover from the lows. But overall, as long as the war continues and as long as oil prices continue to play spoil sport, there is going to be, of course, a very, very choppy season ahead for investors. And in fact, this morning alone, investors have lost a lot in their, in their trades in market. In fact, Sensex is down more than 2.5%. In fact, in early trade, it was down about 3% or so. It has recovered slightly since. So how long the pain, how deep the pain is going to be is completely determined on how much more spikes we can see in oil prices. And of course, how long the Strait of Hormuz continues to stay disrupted and supplies of oil continue to get impeded.
Well, Kartik, historically, does this geopolitical tensions continue to leave short-term shocks, or will this time it will now leave a prolonged impact on the markets?
Yeah, again, I mean, it's a simple question of how long the war is going to last. One would hope, and one was hoping, that this is going to be a short-term war. It is going to be a few days and a few weeks, but if it runs into a few months at least, then the size of the shock and the magnitude of the shock could be far more impactful. In fact, Sensex lost about 2,300 points or so in trade this morning. And if you look at history in terms of not percentage, but in terms of pure value of points, then this is the second largest day of single-day shocks for the Indian stock market. In fact, the last time we saw a magnitude of this kind was when Sensex had lost about 3,900 points on the day the COVID-19 lockdown was announced on the 23rd of March 2020. So in terms of not percentage, because remember Sensex was trading at much lower levels back in 2020 and has since grown over the last 6 years, but in terms of the number of points that the index has lost, today seems to be the second largest day in history for single-day shocks to the market and hence to investors.